Okay.
All right. At any point in time, you can just stop me and say, hey, I'm not really understanding it. Can you go over it again? And I have no problems doing that. That's why I do one-on-ones and not group settings, because some people don't feel comfortable with other people to ask like questions. So this works better for people when they're learning. So the history of Forex, right? Forex has been around for over 500 plus years. It's not new. It's not something that's going away tomorrow. It's not something that just popped up yesterday. Forex has been around when the gold and silver, it's used as a bartering type method, right? It's like saying, hey, you give me your horse, I'm going to give you 5 grains of corn or whatever, or rice, right? So it's just an exchange. And that's exactly what we're doing, because all we're doing is exchanging one currency for the other. So when people are like, is this new? What's Forex? I heard it just popped up. It's been digital since 1994, but it's been around for 500 plus years. It was just that it wasn't digital. So now it's 2020, everybody's on their phone, their computer. Now it seems like it's something new, but it's really not.
Okay.
So Forex is 24 hours, 5 days a week. So the only day that the foreign exchange market is completely closed is Saturday. On Friday, it closes at 4 p.m. and it opens back up on Sunday at 4 p.m. So the only real day that is closed is Saturday.
Mm-hmm.
And each day it trades about $6 trillion. This number is old. Now we're at 6 trillion. So every single day over $6 trillion are traded in the market. So there's never a shortage of money. You never have to worry about missing a trade or not being able to get on at a certain time, because there's always money moving inside the markets.
Mm-hmm.
So banks, they actually use our money to trade in the foreign exchange market. So when we put our money into our account, they take that, they trade it, and they put our money back. So that's the equivalent of me saying, hey, can I borrow $100? You're like, yeah. I take the 100, go make 1,000, but I just bring you your 100 back. That's exactly what the banks do, and that's how they make a profit. So banks trade, different companies trade, hedge funds, individuals, investors, and then retail traders are people who are trading like under $1 million. So you and I will be considered like a retail trader, and there's nothing wrong with that. So all these companies, all these hedge funds, all these big people, they trade in the foreign exchange market, and there's nothing wrong with that. But they just trade with a higher capital than a regular retail trader.
Right.
So the advantages of trading the foreign exchange market is the fact that it's volatile, that you make money every single day, that you can literally trade every single day except Saturday, and you can get it started with a small deposit of $10 for some brokers. Now, the broker I suggest, they require you to start with $50, but the reason why I like that broker is because they allow you to withdraw same day. Now, some brokers, they'll say you can start with $10, but then they'll hold your deposits for like 5 to 7 business days. The broker that I use, they charge $50 to get started, but you can withdraw your money the same day. So if you make 100 today, you can go and withdraw it and go to the ATM today.
Okay.
All right. So anywhere in the world, as long as you have your app, which is your MetaTrader 4 app, so you got that. As long as you have Wi-Fi, laptop, computer, you're good to go. Now, when you start trading, you don't pay me any of your money. You don't give your money to anybody else but you. Once you get started, you're going to have a broker. Now, what the broker does, they're like the middleman, right, between me and you in the market. So you are going to put your money into a broker account. Now, they may charge a fee for you to open your trade. So let's say you open up a trade, they charge you 2 cents. That's how they make money. Everybody's in this to make money. So when you open that trade, that 2 cents is already negative. So you automatically start with a negative balance when you open a trade. But as soon as that 2 cents is covered, you're automatically in profit. And anything that you make after that is your money.
Okay,
So
cool.
they call that a commission, like a spread. They call it a spread. So let's just say the club costs $10. But I tell you, well, if you're going to come with me, I'm going to charge you $5 before we even get to the club. That's the broker. So the broker charges you before you even get to the trade, and that's how they make money. But the spreads are always low. Like I've never seen anything crazy like $30, $40, $50. It's like $1, $2, something like that, small. That's the highest I've ever seen is like $2. So you don't have to worry about that. So it's like once you make 100, it's your 100. You've already paid your broker when you open the trade.
Right.
Okay. So we have what's called trading sessions, and this helps with understanding what times are going to work for your lifestyle when you're trading. So let's just say you're a busy person in the mornings and you're just super busy, the kids, your husband, stuff's going on. You're like, Rhonda, mornings just don't work for me. That's cool because we're dealing with a global market. It's in all countries. So you don't have to ever worry about not having time. That's the best thing about trading is that you don't have to make it. You don't have to fit yourself into trading. you make trading fit your lifestyle. So we
Right.
have 4 sessions that just kind of break up the markets to help you understand how they work. You have Sydney, Tokyo, London, and New York. Now, London and New York are going to be the most volatile markets because our money is one of the strongest currencies, which is going to be in your New York session. So anything with a USD in front of it is going to be strong during the New York. But that's your mornings. That's your 8 to 5. So
Mm-hmm.
some people, they're just not available during this time. Maybe they're at work. Maybe they're homeschooling. Like, you don't really know what people have going on. But something like this may not work in the morning because they're busy. Now we have London session, which is late night. So 3 in the morning until 12 p.m. the next day. This is my favorite session because I'm a night owl. So me being up at 2 and 3 in the morning, it's quiet, it's peaceful. Nobody's calling my phone. I'm not dealing with a whole bunch of stuff. So London works for me.
Mm-hmm.
Tokyo, 7 p.m. to 4 a.m., and then Sydney, 5 to 2. Now, these 2 markets are a little slower because these are the faster ones. So in these 2, you may be able to catch 100 to 200 moves, where in this market, you may be able to catch 50 to 60 moves. So for beginners, someone just starting out, I would always suggest Sydney or Tokyo. So that way you can kind of see things and like feel it out. Sometimes London and New York moves a little faster, and you're like, oh, okay, I wasn't ready, or, I don't really understand what just happened. So try to start out Sydney, Tokyo, and then move into London, New York.
Okay.
All right. So based on your lifestyle, what do you think will be the best market and time frame for you?
I thought I had muted it. So basically, I think like around this time, which is the New York time, right?
It's 5. So it just ended. So New York just ended. So you'll be looking at something probably closer to Sydney,
Sydney, yeah. And I
5
was just
p.m. into
say that.
2 a.m.
Mm-hmm.
Sydney, and I'll show you what pairs you can trade inside of Sydney. So that works for you. It's quiet, it's peaceful. The kids are down, or whatever the case may be. That's what you want. You want to be able to trade where you can focus, right? You don't want to have to sit down. Don't do that. Quit touching that. Don't do that. Like, hold on, let me call you back. Where you can really, really focus. That's where the time you want to set up for your trading.
Right.
And as a mom, I know that's hard to get them all down at one time. So the different markets, they're set up because when the markets open, say let's Tokyo. So Tokyo, you have the Japanese yen and things like that. London, you have Great British Pound, the euro. New York, you have the US dollar. So just depending on our economies, that's what makes money move. So right now, with everything that's going on with the pandemic, a lot of economies are not being stimulated. That's why the stimulus checks came out, of course. So what happens is ours is one of the most fluid markets in the world. So we have a lot of movement. Then you have London being second, and then you have Tokyo being third. That's how you're able to see kind of how much is moving on average in those sessions. So let's just say like the Great British Pound to the Japanese yen. During the London session, you get the most moves, 150 plus moves in that market. So that's how we know, okay, the New York time or London time, that works. I know what to kind of expect. I know what I'm looking for. I know what pairs to trade. And that's stuff you're going to learn along the way. But this is kind of give you like that foundation to understand why it matters what markets you're trading in. So understanding what time and what session you're going to be working in. So we know yours is Sydney. So we're going to start focusing more on the Sydney, and let's just see what we can do.
Okay.
All right. So I'll show you the pairs. We'll go over that when I get into it. So like I said, the best time today, Tokyo, London overlap is cool. London, New York is going to have the most movements. So that's kind of what you can see there. So humans, we walk in steps, right? If I say I walked 100 steps today, we're like, okay, cool. Everybody has their Fitbit, their Apple Watch, and they're trying to walk 10,000 steps per day. Well, in the markets move in what we call pips. So instead of saying steps, we say pips because it has to be universal. Every different country, we all use different measurements. We use different temperatures and all that stuff. So we have to be on the same page. We're going to be using something globally. We all want to speak the same language. So we say the market moves in pips. So you may hear me say, oh, I caught 10 pips or I lost 10 pips. That just means how the market moved. And I'll show you how that's calculated right here. Right. So the market goes up and down. So let's just say we were trying to get into the trade at this point right here. We'll call it right here. we're going to get into this on a buy. So anything going up is a buy. Anything coming down is a sell. So all you have to do is be on the right side of the trade in order to make money. That's how we're able to make money inside of the pandemic right now. As long as I can say I'm predicting this to go up, I make money every move it makes up. But if I say I want to buy it and it starts going lower, I start to lose money. So even with the economy, everything is going down. As long as I'm selling, I'm making money. Now, don't get caught up in buying and selling. Just get caught up in up or down, right? Just knowing what buying is going up and selling is going down. So let's just say we got in at the purple line and we got in here and we took this all the way up to here. We took it there. So we can say we got into this buy, we took it all the way up here and then we got out. So it moved 194 pips. That's how many moves it made in the market, 194 pips. So that's what a pip is. So if it would have gone in the wrong direction to the other end, we would have been 27 pips negative because it went in a sell and we were in a buy. Okay, so that's how pips work. So when you are talking about the market, we always speak in pips, right? And how do you calculate pips, right? So calculating pips is going to be pretty easy as far as like, it's simple math. It's adding and subtracting. There's nothing crazy. So if we wanted to catch 37 pips, okay, I want to catch 37 pips in the market. So all you would have to do is look at the entry and you know we're buying. So if we're buying, we know we're going up. So as long as you're going up, you just add. So if I want 37 pips, I would add it to the entry and it will become 172.87. Because this is where I entered. I know I want 37 pips. So now I have to tell my app where I want to get out. So I want to get out at 172.87, which is 37 pips. Okay. If I was going to be selling this, it would say sell entry. It'd be 172.50. Then I would subtract the 37 and that would be my exit. Because if we're going down on the chart, then you would subtract. Right. So say we would have entered here. We would have entered here and we want to get out right here at this purple line. We would have to subtract the amount from top to bottom. You would subtract it and it would be here. So from 124,562 to 123,849, you would just subtract the two and that's how you would know how many pips you're catching. So we can do it with the tool. That's 71 pips. Now there's a tool that you can use, but I always like teaching it so you know how it's calculated.
Right.
So that's how you know how much money you're making or how much money you're risking.
Right.
All right. So we'll go back over here. All right. So that's pretty much how you're going to calculate that. And I'm going to keep showing you more examples as we get into it. But anytime you're buying, you're going to be adding. Anytime you're selling, you're going to be subtracting. And you always start after the decimal. You don't start in front of the decimal. It's always behind the decimal.
Okay.
All right. So we're going to practice it. So we had 1.35361. The last number is always, it's considered like the seconds. Like on your watch, it's just a second. So you don't have to use the last number. You just go to the next number behind it. So this one right here, we were doing 1.35361. Take that one off. And let's say we want to catch 30 pips on the buy. 30 pips on the buy, we would add 30 to the 36. And that will become 66. So 35661. And that'll be your exit point. So let's just say we have the 1.35371, and I wanted to catch 10 pips on the sell. What would that become?
You can hear me? Okay. So hold on. Give it to me one more time.
1.353 71. We want to catch 10 pips on the sell.
How many will it be?
What would the new number be?
71. So it'll be 81. 1.35381.
No, remember you got to subtract. You got to subtract the 10 because we're selling it.
So it's going to be 271.
271. Correct. Always remember, write it on your paper. Sell, subtract, buy, add.
Okay.
All right, so now we're going to practice it with this one right here. So we have 172.129. Remember that last number comes off, and we want to catch it on the buy for 50 pips. What does that become?
229.
50 pips?
No, I said so. So the temps we add, right? Because it's a buy, so we add, right? So, and it's 10, right? Or is it 1?
No, I said I wanted to catch 50 pips, so I would have to add the 50.
So you got to add the 50. It's going to be 62.
62, exactly. Yep. So you always know how much you want to make, how many pips do you want to catch, and you add it or subtract it to where that you've already entered. So this will be the entry.
Mm-hmm.
So it'll be like, okay, we're entering here, but how much money do I want to make? Okay, I want to catch 50 pips on the buy. So you would add it, and that would be your take profit.
Mm-hmm.
That would be where you exit the trade.
Right.
Right. So it would look something like this. So if we set it up, it would be boom, boom, boom. Let's say we got in here. So you see our entry is 1.23325. That's our entry. And let's just say we wanted to catch 50 pips. 50 pips will be right here. So you see how it's 23325 and then it's 23830. So all you did was add the 50 here. That gives you the new take profit. So you would enter the trade here, and then you would take your money out here. That's called a take profit. So all you have to do is go and tell the app where you want to get in and where you want to get out. You're in control of that at the end of the day. And then you also get to tell it how much you want to risk. So we know we're going to make 50 pips. You may only want to risk 10 pips. You're saying, hey, I'm only willing to risk 10 pips. So you put your what's called a stop loss right here. This is saying, hey, if it goes on the wrong way, I want to get out. I don't want to go any further in the negative. So your reward is 50, your risk is 10. And that's how you set that up. So we'll kind of bounce back and forth between the two. So we have 172.119, and I want to catch 10 pips on the sell. What does it become?
Okay, so let me go to my papers. So you want to catch, that's subtract, right?
Subtract.
So which one are we going off?
We're going off this one right here.
Oh, okay. I ain't see the arrow. So it's gonna be 109 because we subtracting 10, right?
Right. So we take off the 10 from the 11.
Oh. Oh, so because we dropped the one behind it, right?
You drop this 9 right here.
Oh, so it's gonna be 1.
Right. So it'll be 019. So your exit will be 172019.
Right. Okay. We gotta always drop. We don't count that 9.
Yeah. Always the last number comes off.
Okay. Cool.
And then you go right on over to the side. All right. So let's see. So then we have pairs, and always pairs are just the two currencies that you're wanting to trade. So there's called majors and there's minors. So just like if you walk into a shoe store and you're like, oh, can I get Nikes, right? Nikes are going to be readily available. They're going to be everywhere in the store because that's a major brand. So you have things like the US dollar, the Great British Pound, the Euro, the Japanese yen, the Australian dollar, the Swiss franc, and the Canadian dollars. Those are majors. Those are your Nikes. Those are your popular brands, your Adidas, right? But then you have like your Sauconys, you have the Filas who are trying to make a comeback. Those are called minors. Now, those may not be the ones that are popping. They may be not the ones that are popular, but they're still out there. And those are going to be like your Mexican peso or, I don't know what it's called in Jamaica, but, things like that aren't just common. The US dollar, that's the most common currency in the world. The Great British Pound, that's right up next to it. The Euro, the Yen, those are very, very popular. So if you happen to go to an exchange booth at like maybe your bank or your airport, they're going to have the majors up right there for you to see. But I doubt they're going to have the minors. I doubt in Illinois you're going to have the Mexican peso readily available because it's not common for your area. So you have majors and you have minors. All right. So when you have a currency pair, the first pair is called base. The second pair is called quote. Now, the first pair is always the one that you think is going to be the strongest pair. Then you have your quote, which is going to be the second one. That's the weaker pair. So what you're saying is you're going to use the Great British Pound to buy the US dollar. Whatever's first is the strong one. Whatever's second is the weaker one. So right here, it says GBP USD. So all you would have to know is like, okay, which pair do I want to make the strong pair? Which pair is the weaker pair? And you're going to do that based off economy, based off what's going on. So right now, we know the US dollar, we were losing strength because our economy was totally jacked up. Now, you would have that second because it's the weaker pair compared to the Great British Pound. So you would have that pair second. You would use their currency to buy up a bunch of our currency because our currency was losing value. That's why all these stores and stuff are trying to open, because our US dollar is losing value right now. There's no economy, there's no money being circulated. So it's like the dollar is just losing value, losing value, losing value. It's going down. When normally we're the most lucrative currency in the world. Right now we're behind. Like it's just going down every day. Crazy enough.
Right.
And then you have what's called a rate. Now the rate at what it's exchanged at is not how much money. So when you see 1.6567, that's not $1.65 and some extra cents. That's just the rate of which it's exchanged. And I tell people all the time, it's like a coordinate. If I were to say, hey, meet me in Arizona, you know where Arizona is. I know where Arizona is. That's a coordinate. Hey, meet me in Texas. Okay, cool. But then I have to tell you, oh, meet me on this street, that street. So all this is telling the world at what rate it's being exchanged at. That's not a dollar amount. That's just an exchange rate. That's like telling you for one pair of shoes, it's going to be equivalent to 2 watermelons, right? That's the exchange rate. For every pair of shoes, it's 2 watermelons. Every pair of shoes, 2 watermelons. You know that's the rate. That's not how much value. That's not a dollar amount. That's just the rate. We good on that? All right. So this is the biggest part. If you don't listen to nothing else I tell you, understanding lots, leverage, and risk management. That's where people fail the most in trading, is the risk management, because we see that the money is so easily to get that we lose our minds and we stop thinking logically and we start thinking we're gambling. And that's the last thing I want you to do, is gamble. This is not gambling. When you go to the craps table or the casino, when you go to the slot machine, you put your money in there, you pull the lever, that's gambling. You have no control. I can come in here and pull up a chart and I can tell you exactly where things are going. I'm not gambling anymore. I've taken away the gambling aspect. I know, okay, well, price has been going here. I know that, okay, when it gets to this line, it comes back up. When it got to this line, if I would have bought it, I knew where it was going. I'm in control of this. I know based on previous history what it does. When it came to this line, I know next time it comes to this line, I'm going to buy it back up. Every time it comes to this line, I'm going to buy it back up. And every time it came here, what did it do? It went back up. So it takes away the gambling aspect of trading. It's more so being able to read the charts. That's where everything comes from. It's being able to identify what these charts mean and what they're doing. Okay. So lots. You remember earlier we talked about people walking in steps. Now you have to figure out how much you're being paid for each one of those steps. So on your paper, I want you to write pips, P-I-P-S, times lots, L-O-T-S, equals profits. Okay, because that's going to be the formula of how you're going to make money, right? So we know that the markets move in pips. So let's just say, for an example, we came in here and we took this trade up for 184 pips. Let's just call it 185. All right, so we know that it went for 185 pips. 185 pips, profit. Okay, you entered here. This whole move was 185 pips. So now you have to figure out how much are you going to wager per move. And you're in control of that. You can say, I only want to wager 10 cents. I want to wager $5. I want to wager $20, whatever you want to do. So let's just say 185 pips, and all you wanted to do was wager 20 cents. You made $37 off of that move. Well, let's just say I came in and I was like, well, I want to do $5 for the same move. I made $9.25. We took the same trade.
$900 or $9.25?
$900. Because it was 185 pips times $5 puts us as $925. Now we took the same trade, but I put $5 per move and you wagered 20 cents per move. But we both took the same trade. That's how different it is for everybody's account. That's the difference. And you don't have to go and wager a lot of money. Whatever you think is comfortable for your lifestyle, for your bills, cool. So even if you would have done the 185 and you only did $1, that's still $185. So that's where you have to decide how much you're wanting to wager per move. That's going to be your lots. So lots, that's why I said pips times lots are going to equal profits. Now we have what's called a lot size. So 1.00 is going to be considered a standard lot. And for every 1.00, that's equivalent to $10. So write that on your paper. 1.00 is equal to $10. That's not $1. That's $10. Now 0.10 is a mini, and that's considered $1. So 0.10 is $1. And then 0.01 is going to be 10 cents. That's the lowest amount you can trade with per trade.
Okay. The lowest is 10 cents, right?
So 10 cents is the lowest, and you can go up as high as you want. But the lowest you can go is 10 cents per trade. So let's just use some examples, right? So I'm an example person. I like to put this into perspective. All right. So let's just say, boom, we'll go to a different time frame. Let's just say we got into the trade here for the sell. We got in here. And we said we're going to go in and we're going to take this trade to here. That's 51 pips. Okay. 51 pips. And it took, for this to go from here to here, it took 30 minutes. No, not 30 minutes. Probably about 5 hours and 30 minutes to get down there. Okay. So knowing it was, let me see. It was 51 pips. It took 4 hours and 45 minutes. 51 pips. Now, based on whatever's happening, 51 pips, how much money would you be willing to risk per move if you didn't even know this was happening? Let's just say you had a $100 account. You started with $100 in your trade account. How much money would you be willing to risk per move with $100 in your account?
So, hold on, because I'm writing. So give it to me one more time.
If you had $100 in your trade account, you started with $100. That's all you invested to get started trading. And you had a $100 account. How much would you be willing to invest per move when you started trading comfortably?
I'll say like $25.
$25 per move? Now, what happens when it goes in the wrong direction? How many moves is that going to take?
I won't start with 25. I'll start with $5 just to see how it'll go.
$5? Okay. So we'll do $5. All right. Now let's just say we got in right here. Our purple line is our entry. We got in right here. And we were saying $5. We went 51 pips. So we know 51 times 5. Boom. $255 is your profit. Now we got to go calculate the opposite way too. All right. So you your take profit is here, which we know take profit. So if it made it down to here, you would have made $255. Okay. Now we have to always have what's called a stop loss. Now a stop loss is saying, hey, how much am I willing to risk on this trade? So you know you're doing $5 per move. How much are you willing to risk before you close the trade out if it goes in the wrong direction? How many moves?
So how many will I invest if it going to the wrong direction? Or
yeah, how much money are you willing to lose before you close the account? Like how much are you saying, okay, I'm only willing to lose $20. I'm only willing to lose $50, $100.
I'm a risk taker, so I'm going to say 100.
So you're willing to risk 100, okay? So we know 5. So 100 divided by 5 is 20 pips, okay? 20 pips. So we're going to put our stop loss 20 pips from our entry. 20 pips right here. And that's our stop loss. So that's how you would pretty much set up your account, your trades, because you have to put in a take profit, which is here, and you got to put a stop loss. So all you have to be mindful is this: as long as this doesn't come back this way, you're in profit. Anything that comes behind you is negative. So you see when we got into this trade right here, how it came up, it was negative for 5 pips first. So 5 times 5 is 25. So you were negative $25, and then it turned around and you got your 255. So that's how you calculate before you even enter a trade. You know how much you're willing to risk. You know how much you're going to make. Before you put any trade in, you should already know that. That's why it's not gambling, right? Because you're in control of everything that you put in, and you already know all the possibilities of what could happen. And when you come back to check that trade, only 2 things are going to happen. Either you lost that $100 or you made that 255 and now your account's at 355. That's the only 2 things that can happen. So if you're not comfortable losing that 100, don't make that your stop loss. Like whatever you're comfortable with, make that your stop loss. If you're not, then cool, no problem. There's nothing wrong with that. You say, I only want to risk $5. Well, then maybe you need to go down to $1 per move, or 10 cents per move, or 20 cents per move. If you're only willing to risk $5, if you think about, if you're doing $5 per move and you're only willing to risk 5, that means that it can go 1 move in the wrong direction and it's going to close you out. So you have to leave some space for things to happen, but you got to make sure it fits your budget as well.
Right.
So that's where the lot sizes come in. So you're going to tell it, hey, I want to do $10 per move. You would put 1.00. I want to do $5 per move. There'll be 0.50. That's $5. Or nope, I only want to do 30-cent moves. That's 0.03, 30 cents. So you got to tell that your app every single time what you want it to do. So now we're going to practice putting some trades into your MetaTrader 4 so you can kind of get used to what's going on. I'm going to go find you a pair. All right. So let's go go into your MetaTrader 4 app and go to quotes on the bottom left.
Quotes. Oh, it was already there.
Okay. And now what I want you to do is on the quotes page, I want you to find AUDJPY. And if you don't see it, hit the plus sign at the top and we can add it.
Say it again.
AUDJPY.
No, it's not.
Okay, hit the plus sign at the top. And then go to FX crosses. And just hit the plus sign on all those. Just plus, 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 so that way you can have them already on your screen.
Oh, this is a lot.
Just go all the way down, just plus, plus, plus. It'll go fast.
Okay.
So that way you don't have to keep coming back to this screen because you'll already add all the pairs.
Okay. Okay.
All right. So now go back to your quote screen, and then now you should see AUDJPY.
Okay.
All right. So I want you to hold it down, tap it, and it's going to say trade.
Okay.
So at the top, we're going to start from the top down. So you see the top is called your pair. So our pair is the Australian dollar to the Japanese yen, AUDJPY. Okay. The next thing underneath it, if you tap that, it's going to go market execution, buy limit, buy stop, sell stop, correct? All right. We're going to keep it on market execution because we're going to get into the trade right now. Okay. So right underneath it is going to be your lot size. So how much are you willing to risk per move on your demo account? You got $3,000. How much are you comfortably willing to risk per move?
Okay, go say that again.
How much do you want to risk per move?
Is it in dollars and cents?
We're gonna have to change it because right now it's in lots. So you tell me how much you want to risk and we'll change it.
So let's say $10.
$10, right? So $10 will be 1.00.
Okay.
Now I want you to hit buy by market. Now that trade went in, correct?
Hold on. What did I do?
That's okay.
Okay, something happened.
Okay. The trade went away?
Go back to what you said.
Okay. Are we going back to quotes or are we just going back to the numbers?
Everything. Start from the beginning because I tapped some and took it to a whole different.
Okay. Go to your quotes and look for AUD JPY.
Okay, I got that.
All right. Hold it down. Hit trade. Got it?
Okay, I'm in the trade.
So at the top, you see your pair, AUD JPY.
Mm-hmm.
Then underneath that, it should say market execution.
Mm-hmm.
And right underneath that, that's your lot size. We said we're going to do $10, so it's going to be 1.00.
So do I put it in the plus?
Yeah, you can tap it. Tap it, and it'll give you a little number keypad.
1.00.
And now we're gonna.
That's the stop loss or the take loss?
No, that's just your lot size. We haven't put anything else in there yet.
Okay, wait. So the market execution, I see where it's the stop loss and the take loss.
Yep, we haven't put that stuff in yet.
Oh, okay.
Yeah.
Where do I put $10 at? Is it
$10 should be right underneath? It should be right underneath market execution. It should be dead center underneath market execution.
Okay, the negative 0.1, the negative 0.01, 0.01 plus 0, that?
Yep, the black number that's in the middle, tap that and you should be able to change the number.
So I'm changing it to?
1.00.
Okay, cool.
And then we're going to go sell by market.
Okay, tap it. Okay.
Congratulations, you just put in your first trade. So now we have a trade in. So I want you to click on the bottom of your screen where it says trade.
Okay.
All right. So now that trade is active, meaning that we're live. We're in the live markets. We're just using a demo account. So right now you're probably negative because it hasn't gone into profit yet. Remember, we have to pay the broker. Right. So as long as you can see my screen, anything that goes below where we entered, we're making money. So let's just say we entered, I think we entered kind of like right here. So anything that goes over this purple line, you're going to start seeing it turn blue on your screen. Right now, it's probably still red. Yep. So we'll keep it going. We'll watch it and stuff like that. And we'll kind of come back and forth. But that's how you place a trade. So what I want you to do is that trade is still on your screen. I want you to hold it down. And then you're going to see modify. So hit modify for me.
Okay. Phone had went out. So hold on. I'm still in the trade. So I'm still in the trade section.
And then the trade should be in there up top, in the middle. And then you want to just hold it down and then you'll see modify.
Okay, I'm holding it. Because where you said the first step you just took me to where you told me to put the 10. And it took, and once you told me to hit buy sell, again, I'm at that screen.
So you're inside of trade, right? Not we see where it says history, trade, and chart.
Yeah, I see it's a quote chart, but I'm in a trade screen.
Okay, so it should be your trade should be right in the middle. There should be a dollar sign, not a dollar sign, but an amount right next to it. where it'll be like AUDJPY, it'll say sell, it'll be 1.00, and then right to the right, there should be a red number because we're negative right now.
Okay, yeah.
Okay, so you just want to hold that down and then hit modify.
So do the sell or buy?
No, we're not doing anything yet. We're about to go and put our stop loss and our take profit in there.
Okay, so this is the stop loss and take profit. This is where I enter it in there, right?
Yep. We're about to enter it right now.
So I start with stop profit.
Stop loss. It should say stop loss.
Stop loss, yeah. So I tap on where it say not set.
Yep, and I'm going to give you the coordinate for that.
Okay.
The coordinate is going to be, let's see where we want to put our stop loss. Let's go 69.290.
69.290. Okay.
In our take profit, I'm going to put it at take profit. I'm going to give you a 10 pip take profit so we can. Hold on 1 second. Let me make sure I get you the good take profit. All right, we're going to do 69176.
So the take profit?
69.176.
Okay.
And now modify should be lit up and you can just hit modify.
So hold on. So I put the 69.176. I don't see modify. Is it the plus sign on the side?
No, hold on. Let me switch this. I'm going to put my screen on for you. I'm about to share my screen with you so you can see my screen. Taking 2 seconds. It's trying to install something on my computer. Come on. 2 seconds. It's almost done installing. I guess it's an update. Usually it just connects right away. Okay, I don't know why it's not working. Bluetooth is on. Everything is on. Okay, I don't know what's going on with this phone, so I'm not gonna worry about it right now. So we should be in profit on that trade, needless to say. It should be in the blue. If you hit trade, your trade should be blue now.
Okay, 1 second. So do I hit the blue one or the red one? It says sell by market, buy by market.
No, you can just back out of that screen because you shouldn't be entering a new trade. That should be, you should just go to where it says trade at the bottom of the screen.
So it says $32.44 US.
Okay, so you're in profit. Here we go. All right, so here's my screen. All right, cool.
Okay.
All right, let's get to it. So this is one of the demo accounts, right? So when we went to the AUD JPY, let's see. Right. So we went AUD JPY. We hit trade. Right here on this first screen. This is how you put a trade in. So you go from the top to the bottom. AUD JPY. You can change it to a buy stop, sell stop, buy limit, sell limit. Right now we're using market execution because we want to get into the trade right now. Mm-hmm. So we keep it on market execution. And then we said we want to do $10 per trade. So that'll be 1.00. And then we didn't put a stop loss or anything in the first time. So we just wanted to do sell by market. So that puts you in a trade. So right here on this screen where I was saying at the bottom where it says quotes, charts, trade, history, settings, right here is where you're going to be able to see all of your active trades. Anything that's running right now, anything that's moving currently, that's going to be right here. So this is where the trade is active, but we're negative $19 at the top, $19.92. We're negative that right now because we haven't paid the broker and it's probably still pulling back. So when I wanted to modify it, I just hold it down and hit modify. And this is where you can put your stop loss and you can put your take profit. You can put all those things in right here by just tapping it in, changing it. So the take profit I think we set was 69176, 69176, and then the stop loss was 69290. Right? And then it's going to say modify. So now I just hit modify and I don't have to keep watching this anymore because now it's either going to hit stop loss or take profit. It's going to do one of the two. So I already know what I'm looking at. So now I can just let this do what it's going to do because I set all my parameters. I told it when I want to get in. I told it when I want to get out. I told it my risk management. So once you set this, you don't have to keep watching it. It's going to do whatever it's going to do. So now let's just say I wanted to go and I wanted to close the trade. I would hold it down and I would hit close. If I close this trade right now, I'll close it with a negative $30. So I'm not going to close it out. I'm going to just leave it and I'm going to let it do what it's going to do because I know it's going to keep dropping. So I'll go back and I'll show you on the screen back here. And see the reason why I know that it's going to keep dropping because I've already marked it up. So I know that this is my take profit right here. You got in at this purple line, so you're in profit, but I got in down here. That's why I'm not in profit yet. So our entries were different. Now let's just say you wanted to go and close this trade out. So just go back to the trade screen. Hold it down and hit close.
So when I hold it down, it don't nothing happen. Like you do it again. What you just do?
Right where it says AUD JPY sell, I just held it down on the screen.
Oh. And put modify?
No, we're just gonna close it. Close it out. I want you to close it in profit.
Okay.
So close it and then I will show you what it go look to see how much money you made.
So hold on, because these numbers going so crazy.
Yeah, once you hit close, just hit close again.
Close the profit? Okay.
Now, if you click on history, you'll be able to see how much money you made.
Is it the $20?
Yeah, there should only be one trade in there. The only trade we just took, the AUDJPY sell, there should be a number to the right of it. It's going to be blue. Or I think, yeah, it's blue.
Do it say deposit or?
Nope, active deposit, right underneath deposit.
So it say $20.52.
Yep, so that was what you just made on that trade right there. $20 in less than, what, 5 minutes?
Mm-hmm.
So that's what you made off of that trade. And we closed it out. We didn't even let it go to the take profit. We closed it out early because I was showing you the example, but you could have stayed in until it hit take profit.
Mm-hmm.
So at any point in time, you can always close your trade out. If you're like, oh, I'm good with $100, you can just close the trade out. You don't have to wait for it to hit take profit.
Okay.
All right. So I'm going to go back to this screen right here. So that's how you would put a trade in. That's how you would modify a trade. All right. So we were talking about lots and we were talking about things like that. So remember when we just put the 1.00 in, that was a $10 per move. So that was 1.00. Then if you wanted to do $1 per move, it will be 0.10.
Mm-hmm.
Micro, 0.01. So you remember you have to tell the app every time how much money you're wanting to wager per move. Because if you don't tell it, it's going to stay on the last lot size that you use. So say last time you did $10, but this time you don't want to do $10. Maybe you want to do $5. If you don't change it, it's going to stay on the $10. So you got to change it every single time. Okay. So if I wanted to do a $4 lot, what does that look like? $4.
So if you want to do $4 a lot, so wait, which lot? $4 is the mini lot, right?
Mm-hmm.
Okay.
Look at you. 0.40 will be the mini lot.
Yep. Because you're doing $1 and 10,000 units of base currency is $1.
Yeah.
Great.
There you go. See? Told you it wasn't going to be too hard. It's just some verbiage, really.
Yeah.
That's all it comes down to, is a little bit of verbiage.
Yep, and I'm learning this stuff now. It's kind of crazy because I'm like, I didn't know lawyers got to learn graphics and all this stuff.
That's crazy. I didn't know that either. That's interesting. All right. So if I wanted to do $20 per move, how much is that? What would that look like?
$20. If you want to do $20 per move, so now you will use the standard lot, and get this. So it will be like $210. No, yeah, like $210 you will make.
How many standard lots make up $20?
Oh, two.
Yep, 2.00.
Oh.
There you go. 2.00 for a standard lot. So what happens a lot of times mentally, we'll see this and we'll think it's $1. So you'll put that in, you're like, oh, I only did $1 per move, when really you're doing $10 per move. So you definitely want to make sure you understand lots. For sure. So we'll do one more. What is 40 cents per move?
40 cents. So you will use the 1,000 units. So it'll be 0.04.
Yeah. See, you pick it up fast. I knew you had it in you. So that's lots, and that's what you really want to kind of make sure you go over this a few times, and you'll have this recording as well.
Okay.
All right. So like I always recommend a lot size to use based on what's in your account, but I'm no tax professional. I can't tell you what to do with your money. I can only suggest and recommend. So if you have $100 account, I would only recommend using lot sizes between 10 cents and 50 cents comfortably. Now you can go up to $1, but just think if you had $1 per move, and let's say you did your stop loss at 20 pips, that's negative $20 if that trade happens to go on the wrong way. So now from that 100, you're automatically down to $80. That was just one trade. So you just got to think about it both ways, up and down, the positive and the negative. Don't just look at one side and just be focused on the win. Focus on if it happens to go the wrong way as well. Okay. All right. Now, if you're using like a 200, a 500, 750, or 1,000, then of course you can make your lot size bigger. Everybody wants to use the standard because they see the money. Like, oh, $10, I can make $100 quick. Yeah, you can, but it could also go the wrong way on you quickly as well. So be mindful. Like, just really think about it before you pick that trade. So we just talked about leverage and lots. And then I always reiterate, this is not gambling. Please don't get into the habits, the bad habits of like, okay, I'm just going to risk it all. I'm going to just go heavy. Like, you got kids, you have a family. Like, I don't want you losing any money. Like, my goal is to try to make you lose as least as possible. Like, I try to make sure you're winning and that you're learning. Like, don't just be like, oh, you get green eyed and you're like, okay, I know I can make a lot of money. And then you're just out there gambling. Like, let's not do that. So we know we make money buying and selling pairs. So as long as we're on the right side of the trade, that's how you make money. So if we buy in down here, anything that's going up is profit. If we sell up here, anything going down is profit. That's how we're different from the stock market. In the stock market, you only make money when the stock is going up. But in Forex, you can make money whether it's going up or down. That's where I like this better because I've been involved in stocks and I'm just like, well, dang, like I don't control their money. So how do I know what's going on? And it's like, you don't. So let's just say LeBron James tomorrow comes out and it's like, I don't rock with Nike no more. Nike stock is going to go crazy. It's going to shoot down. So if you had $1 million invested into Nike stock, you don't know what's going to happen tomorrow. You don't know what LeBron James is going to say. And all of a sudden your stock is just going down. You're just losing money. Well, in the Forex market, all I would say was, well, LeBron said something, I'm going to go and sell it because I know it's going to go down. As long as I'm on the right side of the trade, I'm making money. That's the difference between stocks and Forex. Make sense? Okay, cool. So buying and selling. We talked about the stop loss. Stop loss. Do not get into a trade without a stop loss, okay? Because that's you telling the app how much money you're going to risk. If you don't tell it, it doesn't know. So if you get into this trade right here and you're like, I want to sell. I think it's going to go down for a sell. And you're thinking, okay, it's going to do this. You come in here and you think it's going to come down here. But you go put the kids down, you're making dinner, you're doing all this stuff, and you never tell it where you want to get out. You think it's going into your profit, but guess what it did? It pulled back. You didn't put anywhere to stop the trade. You never told it where to stop. Look how far it went. It went up for 10 pips in the wrong direction. If you would have had $10 per move, you would have lost $100 because you never said, hey, I want to get out here if it happens to go the wrong way. You have to tell it that. You say, okay, I only want to risk this. So if you're doing something with your family and it goes the wrong way at 2 pips, it's going to close you out because you told it where to take you out. That's called a stop loss. So every trade needs a stop loss. You wouldn't get into your car and drive with no brakes, would you? So I don't want you getting into trades without a stop loss. Like, I know we're busy people. You know, life happens. It takes one time for you to set your phone down, get distracted, and then you come back and realize I didn't have a stop loss. So let's get in the habit of always putting a stop loss. Okay? The next thing is how much should you risk per trade? Again, that's something I always leave up to you. I suggest 2% per of your account per trade. And that's just something like a general rule of thumb. But again, some people are more risky. Like for me, I'm willing to risk up to $500 per trade. That's just me. But that's who I am. Somebody else may be like, well, I only want to risk $20 per trade. Or I'm only wanting to risk $5 per trade. So a 2% is usually like, if you just do the 2% of your total account, that'll kind of help you how much you can risk per trade without blowing your account. But if you're willing to risk $5 and you know you got $1,000 in your account, well, you losing $5 per trade won't really hurt you. You would have to lose almost every trade for that $1,000 to be affected. All right. So the same way we wouldn't get into a trade without a stop loss is the same way you don't want to get into a trade without a take profit. A take profit is you saying, hey, I want to take my money at this point. If you don't put one, the market doesn't know when to take you out. So if you were telling it, I want to take this down, but you never tell it where to get out, it could have come down here and then started turning around, but you never told it, take my money, never said, take me out. So it did all this while you were living life, doing whatever, and then it started going back the other way. So all it's going to do is hit your stop loss. Mm-hmm. It never took you off the trade. So everything needs a take profit. Everything needs a stop loss, no matter what. Good? Mm-hmm. Alrighty. We have different types of entry orders, right? What we just did on your screen, we did a market execution. And a market execution is you telling the market, say, hey, I want to get in wherever price is. So if price is right here and you think it's going to keep selling, you would get in right here where that red line is. That's current price. So that's what a market execution is. It's like saying, hey, put me in the trade right now. Now we have pending orders, which is something that's for future. So let's just say you was like, okay, I think this is going to stay in a sell, but I'm not sure yet. So what you'll do is you'll put a future entry, which is called a sell stop, right? You're saying, hey, if it continues down, then enter me in the trade only when it crosses over this line. So that's a pending order, meaning it won't activate until price gets to that point. If price never reaches that point, you don't have to ever worry about losing anything because it never opened. So if price right now starts to turn around and go up, this trade will never activate. But as soon as that trade crosses that blue line, my trade is now active. That's a future order. That's a pending order. Mm-hmm. So as soon as it crosses, now that trade's active. And now I'm making money.
Right.
But if I would have done it earlier and that trade would have went the other way, I would have been losing money instantly. So right. You have to always understand what you're trying to do. So the thing, that's a sell stop, right? A sell stop says, I want to get into the trade once price continues in that direction. So if price is up top, let's say price is this black line, and you put a sell stop down here. As long as price comes over that line, that's when you will activate. Same thing for a buy stop. As long as it goes up and it crosses your blue line, that's when it will activate. If it stays in between and it never crosses that line, it just moves sideways, you never activate it. If you say you're going to do a sell stop, but then price turns around and goes up, you never lost any money because your trade never got activated. That's the beauty of using pending orders. So you see how this one right here, it's still going. We're good. We went straight into profit. We're already 4 pips up because we caught it going straight down. So that's how you use a buy stop. Now we have something called a buy limit. It's a little more confusing, but it'll make sense, right? So your buy limit says price is up here, and you think that price is going to come down, then go up. That will be considered a buy limit because you would enter the trade down here. This is where you would enter at this blue line now. So if price comes down here and it never makes it to this blue line, your trade will never activate. But as soon as it comes here and activates up, you're good. Now your trade is active. That's a buy limit because you think it's going to come down, then go back up. So that looks like this on the screen. So you think price is going to come down, then it'll activate once it goes up. So you could put a buy limit with a sell stop. You can put 2 orders like that in. So what happens is if price comes down and it keeps coming down, it'll activate your sell stop. But if price comes down and it goes up, it'll activate your buy limit. So you're just setting yourself up to win either way. Mm-hmm. So you can set 2 orders at one time. So we would have had this buy limit right here. Mm-hmm. Buy limit. And then right underneath it, we would have had a sell stop. If price would have come down and kept going, our sell stop would have activated. Say price would have done this. Let's say it would have come down and done this. The sell stop would have activated. But it didn't. It came here and went up. So our buy limit activated. So you can put both of them in place and one of them are going to activate. So you're giving yourself a higher percentage of winning by putting 2 order types in. Mm-hmm. I know it sounds a little confusing in the beginning. I know, but you want to make sure that you kind of like write this down: buy stop, sell stop, buy limit, sell limit, and then you'll understand how to use the two and when to use the two in your trading. Just like we did earlier, just by coming into it, we set this buy stop, and then price came down and activated, because you want to give yourself the best chance of winning as opposed to just guessing. Again, we're not gambling. We're not out here just, doing something. You want to set yourself up to be the best position. So we know that what the market looks like. We know that it's been going up and now it's going down. So we know anything going down is a sell. So we would say, okay, well, I'll put a sell right here. If it comes lower than this, then I want to activate. But if this starts turning around, it won't ever activate. We never lose any money. But if it comes down and crosses over the sell stop, then we'll be active in the trade. So you can always put pending orders to make sure. So instead of you thinking, oh, it's this, you just make sure it's that once you set the pending order. Instead of guessing, oh, I think it's a sell, oh, I think it's a buy, you set a pending order, and then once price actually goes that direction, that's when your trade will activate. Okay?
Mm-hmm.
And I'll show you how to set one of those in a few seconds.
Okay.
So that way it'll make more sense. It's when it's practical, it makes a little more sense. All right. So what we're going to do is we're going to say, all right, we're going to set a sell stop because we think price is going to continue down. We think it's going to keep going in the downward direction. But we don't want to enter the trade right now. We're going to wait for it to go all the way down, and then we want to get the trade. So that's going to be our sell stop entry right here. I'm going to make it yellow. Okay. So until this trade crosses down, this trade will not activate. Well, let's just say we go and do a buy stop. Right? Now we think it's going to be, in case it goes up, we would set a buy stop. And we would say, okay, I want to take this buy stop all the way here if it goes up. So you see how we trapped price? All we did was trap it. Now it only has two options. It's either going to go up or it's going to go down. It can only go two ways. If it goes up, it's going to activate our buy. If it goes down, it's going to activate our sell. But it has to go one way or the other. As long as it's trapped in between, we're good. Okay? So I want you to go into your app, go to your quotes, choose AUDJPY. Got it?
Mm-hmm.
All right. So the first one we're going to do is we're going to do our buy stop. So right where it says market execution, change that to a buy stop. Got it?
Mm-hmm.
All right. So our stop loss, we're going to put it at 69147.
Mm-hmm.
And our take profit, we're going to put it at 69290.
One second.
Mm-hmm.
So trade, right?
Mm-hmm.
So stop loss.
Is it on a what? Is it on a buy stop?
No, I'm at the stop loss.
Yeah, at the top though, at the top of the screen, is it at a buy stop or is it on a market execution?
Oh, your screen. I'm thinking you asked me to look good on my screen.
No, I am. I'm asking you at the top of your trade. You remember we have to change it from a market execution. We have to change it to a buy stop.
Mm-hmm.
Okay, so you already changed that?
It's the stop loss is 69.168.
Right underneath the pair, right where it says AUDJPY, right underneath it, what does that say?
The market execution?
Yep, you got to tap that and you have to change it to a buy stop or sell stop.
Oh, so I'm doing buy stop or sell?
Let's do the sell stop.
Okay. Okay.
All right. So a sell stop, our price is going to be 69147. Our take profit is 69082. And our stop loss is 69213. Now it should be blue for you to place. Go ahead.
You want to know what I got?
No, it shouldn't be activated just yet, right? It should just be, you just placed the trade. Nothing's active on it yet.
Oh.
Because I remember that's a pending order. It won't activate until price goes over it.
Yeah, because it's at like negative 20.31.
It's negative? Shouldn't be negative because it's not active yet.
Yeah. It's going up and down.
Okay, hold on. Let me see. Let me pull it up on my screen. I'm going to share my screen. All right, so I'm going to walk through the whole thing. So it's AUDJPY, boom, chart. I'm going to hit trade. So for the top, we're going to do AUDJPY. We said we're going to do a sell stop. We're going to do $10, so that's 1.00.
Okay, so that's what I'm doing now, right?
No, I want you to watch me put it through.
Okay.
So price is what the number I gave you was 69153. I probably got to go a little lower because it's already there. 69126, 69126. Hold on one second. 69126. Okay, cool. I'm gonna place it. So you see how I placed it, and there's nothing moving right now next to it. It's not active yet because there's no money. There's nothing moving next to it. This is just the price we're gonna enter at. 69126 is my entry price. And right now price is at 69143. So we're not there yet. That's why it hasn't activated.
Yeah, mine's turned red. Let's start over.
Yeah, yours is active because you got in before me. So yours is activated, yeah. I just got in. So mine is after yours. So now yours is active, but you should be going into profit soon. So that goes to show you, like, so if you look on your screen right next to the pair, it should tell you at what point you got in. The first number to the left, that should tell you your entry point. 69 something 147. So that's how you know you got in. So I'm getting in at 69126. So mine will be later. But that's how you would be able to see it. So anything that's right here, that's not money, that's a pending order. It hasn't activated yet. But as anytime you see money up top, it's moving, that's when that trade is active. So if I go here and I just said I want to just do a market execution and I wanted to sell, now this is an active trade right now. So you see the difference? This one's active, this one's pending. So that's why this one hasn't activated yet, because we did a sell stop. And see, this one's a market execution. So this one entered right then and there. This one won't actually activate until price gets to 69126. So right now price is at 69146. So we just got to wait for it to get down. But yours should be already activated though.
Okay.
Yeah. And then you always can hold it down. You can always go into it and modify it. And you can change stuff on there. And you'll be able to go to history. You'll see all the trades you've ever taken in your history. So we go through the week. You can go through the month. You can go custom. You can always see what you ever done. So anything in history has already closed out. So right here, you'll see I won for 24 and then I lost for 29. So I'm negative for $10. I lost $10 in this account. So you'll be able to see every single trade that you ever took. So if I close this one out right here, if I go close, it'll be in my history as a loss. So now I have 2 L's, 1 win. So I'm at negative 29.65 for the day. And that'll show you like for the whole day, if you go for the week or for the month. So for the month, you can see like that. So let's go back to this screen. And again, this is foundation work. I don't want you to feel like, oh my gosh, it's a lot. But today we're just laying foundation to get verbiage, understand what things mean. So right now you should be in profit. Because see how it crossed over our yellow line? You should be in profit.
Oh, great.
Mm-hmm. So if
My
you want to let
chart,
that keep riding, say it
the
again.
chart, the chart lit up.
Mm-hmm. So yeah,
So,
you should be in profit. So that's your buy stops and your sell stops and your buy limits and your sell limits.
my profit today is $20.
Yep. So the trade that you're in right now, go hold it down and hit close.
Okay. Wait. How do I wait?
Go back to trades, the trade tab,
Mhm.
and then if you hold it down, it should be closed.
Close.
Mm-hmm.
It say close with loss negative 1.30.
Also $1.30. Okay. I mean, you can keep it open or close it. Don't really matter.
I'll close it.
Yeah. So now if you go to history, you'll see that you won one and you lost one, but you won one for 20 something and you lost one with a negative $1. So you're still up $19 for the day.
Mhm.
Mm-hmm. So even if you lose, you're still winning.
Mhm.
All right. So now we're just going to go over some questions to review to see if you truly understood what we just talked about.
Mhm.
All right. So what are the names and the times of the trading sessions? What session did you say was going to be the best session for you, and what time was that at?
I'm sorry, what you say? Oh,
The
I
trading
said
session?
Sydney's time.
Mm-hmm.
Oh, you asking me a question.
Uh-huh.
What I name time the trading section? It's Sydney time from 8, no, from 5. It's late. It's the evening to morning, right?
Right.
I mean,
Right.
we profit if we buy euros, US dollars, entry 1.7033 with take profit 1. Okay. So,
Take your time. Take your time. So we'll break it down, right? How many pips do we profit if we buy? When we buy, do we add or subtract?
when we buy, we add.
All right, cool. So we know we're adding, but we already have both the numbers. So what do we do in reverse? If we already have we got to subtract it at this point.
Mm-hmm.
Mm-hmm. So if you subtract it, and we know we leave the last 3 off all the time.
Mm-hmm.
So if we just took this 53 and we only took away 3.
Mm-hmm.
That's
So
your
50.
Mm-hmm, that's your 50. So
Mm-hmm.
you know the number would be, we caught 50 pips.
Right.
So we made 50 pips, all right? So using the answer above, how much we have made if we were using one standard lot? How much is a standard?
20.
Nope.
No. No. $10.
$10, yep. So we had $10 and we made a profit of 50 pips. How much money did we make?
$500.
$500. There you go.
Okay.
$500.
Because we use 50 times 10.
Mm-hmm. Yep.
There we go.
All right. Here's a little tough one right here. Are you ready? Are you ready? With 2 orders of 0.85 lot size, would a 20 pip stop loss be proper risk management on a $300 account, right? So if we break this down and it says we're using a lot size of 0.85, how much money is that?
That's a lot size. Is that $100?
No, remember 0.80 will be what? Lot size. That's minis, remember?
10 cents.
Minis. What were minis?
Minis
Not
was 10
micros.
cents.
Micros were 10 cents.
Oh, minis is $1.
$1. If we have 8 of them, how much do we have?
$8.
$8. Okay, so that's the first number. Now the second number is 0.05. How much is that? That's micros.
So it's $8.50.
$8.50, right? Okay. And now it's saying we had 20 pip stop loss. So we would multiply that 20 by that 8.5, $8.50.
Mm-hmm.
Right? So that would give us $170.
Mm-hmm.
So we're risking $170 on this trade, but then it says we had 2 orders, meaning we put in 2 trades.
Mm-hmm.
So we have to now multiply that 170 times 2.
Mm-hmm.
So what's that number?
170.
You can use your calculator because I'm using mine.
170 170 times 2 is 340.
340, right? So we are risking 340, but how much do we have in our account?
300.
So is that good risk management?
No.
Not at all.
If we lose
Not
it.
at all. We're losing. So don't do that. So you see how some people, they'll get greedy. They'll put the trade in twice, or they'll use this big lot size, knowing if you're risking 20 pips, you can't use 850, or you can't open it twice. So you can either use a smaller lot size, or you can only do it one time, because you know you only have $300 in your account. So see what I'm saying? Like, it's all about like making sure you understand you're not being greedy or you're over leveraging, because that's what happens. Most people just over leverage. It's not that they don't know how to trade. It's just that they're greedy. You still good?
Mm-hmm.
All right, last one. You're batting for 100 right now. You're almost there. This is the last one. Will you get it? USD CAD. We're going to sell. USD CAD. Our entry is 1.33720. And we're going to sell. So what do we do when we sell?
When we sell, we subtract.
Subtract. Okay. So now the next piece is on a 0.50 lot. How much money is that?
$50.
Nope. 0.50. That's 5 minis.
That's 500, right?
5 minis. How much is that?
$5.
$5. There you go. So $5. All right, we're gonna break it all the way down. And it says we're on $5 lots. I want a $200 profit, and I want a $75 risk.
Mm-hmm.
So we already know how much we have per lot, and we know how much we want to make, and how much we're willing to risk.
Mm-hmm. So we do 5 times 75, right?
Yep, exactly.
375. So we already profit what we want to profit plus $175 more, right?
Nope. So here's how it works. So we know that we have a $200 we want to profit. So we would take that 200 and we would divide it by the 5.
Mm-hmm.
And that would give you 40, right? So we know we need 40 pips to make $200.
Mm-hmm.
So now we know that 40, we can take it to the entry price, and then we would subtract it because we're selling from the 72. Mm-hmm. And that's going to be our take profit number. Mm-hmm. So it will become 1.33320. Mm-hmm. That would be our exit. That will be our take profit. Mm-hmm. Now we take that same 75 and we divide it by the 5, and that'll give you 15. And then we know we need to add it to the 72 because that's going to be our stop loss. Mm-hmm. That means if it's going in the wrong direction, we're only willing to risk 15 pips, which is $75. Mm-hmm. So then we know we would add that here. So then we would add to the 15 to the 72. Now we become 87. So mm-hmm. 1.33870. Mm-hmm. And that will be your stop loss. So now you have your entry price, you have your take profit, and you have your stop loss. Mm-hmm. And we know that we're going to make 200 and we're only risking 75. Mm-hmm. So that's how you could break a trade down if you just knew how much you want to make, if you know how much you're wanting to risk, mm-hmm. in dollar amounts. So if you already know, like, man, I want to make $500 today, but I'm only willing to risk 100. Okay, cool. Now you just got to figure out, okay, what lot size can I comfortably use? Because if you only have a $500 account and you know you want to make 500, well, mm-hmm. Can you use $10 trades? Can you use $10 lot sizes? If you do, you're only willing to risk 100. So that means you can only risk 10 pips.
Okay.
So it's just money. All you're doing is calculating money. How much do you want to make? How much are you wanting to lose? It's like I tell people all the time, like you go to the casino. People go to the casino, they're like, okay, I'm only going to take $500 with me. Okay. But then if you go to a $25 table, meaning every hand is $25, how many hands can you play before you blow all your money? Mm-hmm. And that's all it really is. It's just calculating like up and down. It's adding and subtracting. Mm-hmm. Money is money at the end of the day. It's all money.
Yep.
So that's your first lesson. I know it was overwhelming. There's a lot of information to digest, but you're going to have this recording so you can go back over it and you can study and you can like test yourself and quiz yourself. And you're going to be inside of the Discord group. So when you're inside of the Discord group, like I said earlier, you can go right here to the trainings and webinars and you can start watching stuff that we talked about today. Like there may be stuff like, okay, how do I do this? How do I do that? We talked about it and then watch that video. We haven't talked about it, don't watch the video yet because it'll confuse you. And then you start just kind of paying attention to conversations. What are they talking about? Okay, they're talking about this chart. Okay, are they buying? Are they selling? Now you have a foundation. Now you have some vocabulary that'll help you understand what you're looking at. And then next session, we're going to start marking these charts up. So then you can understand how to get in a trade, how to get out of a trade, when's it a buy, when's it a sell. And then we're going to start getting into that. But now you have your demo account. You know how to place a trade. You know how to close it out. So now what you'll start seeing, if you go right here to the Forex signals, well, you'll see, I'll give you all the information. I'll say USD, CHF, sell by market, or it'll say buy, it'll say inch, it'll tell you everything. What's the stop loss? What's the take profit? You can start putting these trades in your demo account to start getting practice.
Right.
So you'll be able to see that right here inside of the signals group. Inside of the trade talk, we're just mostly just conversational about Forex. So you won't really see signals in there. They'll be in the signals group. And that way you'll be able to start just seeing like, okay, you've seen yourself make $20 in like 5 minutes already. So you know how possible it is. You know that it's possible. So today is Monday. How do you feel about your next session and when do you want to schedule that out?
Let's do it. Is a weekend fine?
You said a week?
A weekend.
A weekend? Like this coming weekend? Okay. Let's see. We got the first is on Friday. So the first, second, or third.
I told you I'm a fast learner. I like to learn fast.
I see. It's no problem. I'm cool with that. So you want to do first, second, or third?
Give me the morning.
Morning? Okay.
I'm up early. Yes.
Let's do the Saturday at 11 a.m.?
Yep.
Okay. That's going to be 11 Central Standard.
Central. I'm Central with you.
Okay.
So now I'm joined with all the groups, right? Okay.
All right, let me put that in my calendar. 11 a.m. Give me a reminder. $30. All right, so I got that. And I always reach out to you before so you can be like, hey, something came up, or if you know you can't do it right away, just let me know. Cool. So yeah, do you have any questions for me or anything like that?
No, currently I don't. I thank you so much.
No worries. Just reach out to me if you do. You can call me, text me, or you can contact me in the group. I'm going to save this video down and I'm going to send you the link for it so that way you can go back and watch it.
Cool.
All righty. You enjoy the rest of your day.
Thank you so much, Rhonda. I appreciate it.
You're welcome. Bye-bye.
All righty.